You are listening to ChartingWealth.com for Wednesday, the 13th of April, 2016. We always start with IYY on our two-day chart. We see that as the market continues to move along sideways, even though it was an updated 1.04%, we continue to get closer and closer with our MACD crossing over the signal line. That has not occurred yet, but it sure seems imminent. But again, though, we go by the charts. That's what the charts are telling us. The derivative oscillator lost more speed over the course of the two-day candle, and we continue to see the market slide sideways. We've broken the two-day trend line two-day candles ago. I guess we could start trying to draw a down, well, can't even draw a down arrow, a down trend line actually at this point. It's just sliding sideways too much. Now it could be getting another wind to pounce right up again. In fact, there's room above with the Bollinger Band, although the Bollinger Band, which are volatility bands, have kinked both coming in, which means less volatility. That, of course, is indicative of a sideways slide. When that starts happening, your Bollinger Bands tighten up. We saw that happen back with our candles, sometime between about the 14th of December and at the end of the year, before the market took that huge downward plunge for a couple of weeks. So what do we have going on now? Well, if we look at the intraday chart, that is the 4-hour, we see that in the morning there was a doji indecision, then the market shot up in the afternoon. Does appear to be getting ready to cross over, going up. And again, we go by what the charts tell us. The charts are still in an upward movement on the two-day chart. Still, where we've got an upward trend as far as our MACD goes, even though it's getting closer to crossing over. And we may have the 4-hour chart crossover. If that happens, it happens. And we look for a potential entry point into an upward trend. But at the same time, there's a cautionary tale here. As we've slid sideways, the market does appear to be long in the tooth. But again, we don't go by what we think, but what the charts tell us, right? So just be aware as we go forward what we see happening. Now let's jump over. We can see that for the day, the S&P 500 is depicted by SPY, was up 0.94%, so almost a percent. However, again, derivative oscillator lost energy, and the MACD is getting closer, converging with the signal line. So pay attention, be cognizant of that. If we look at our short chart, 4-hour chart, what do we see? Again, up movement, a little bit in the morning, a lot in the afternoon. Appears to be getting close to crossing over, going up. Hasn't happened yet. Now we're going to cut back over to the two-day chart and take a look at the Qs. What is the Qs? That's the NASDAQ 100. Still above the two-day trend line. It again, too, is getting closer. The MACD with the red signal line. Derivative oscillators lost a lot of energy. Again, the market can always bounce back up. On the two-day chart, we see that we do have a small red down candle, although for the day, and again, this is a two-day chart, but for the day, the market was up 0.84%. So close, getting close to a percent there. And what do we have happening? Well, we're above the two-day trend line. We're still in the green on the derivative oscillator, but like I said, it's losing a lot of its speed. Let's look intraday. What do we see going on? Well, we still have a confirmed down move on the short chart. The derivative oscillator's losing some of its down energy. It does appear that the MACD is getting closer, although not very close yet, to crossing the signal line. And we'll just continue to watch. We can see that we are below, well, I guess we closed a little bit above the trend line. So we'll just continue to watch. Again, this is a sideways sliding market for the most part. Dangerous if you're jumping in to any big trends, although the Qs looks better as far as the MACD derivative oscillator and being above the two-day trend line than the other charts do. So be cognizant of that if you're looking for any kind of practice trade in the Qs. Now, lastly, and this is interesting, gold. Like the other charts, the indexes, gold too was up now just barely. It was up 0.02% for the day. As we look at our 2-day candle, which represents, of course, 2 days of movement, we see that it's a large candle. That most of that movement was primarily during the day on Monday. So what do we see happening? We can see how the market opened on Monday. In fact, we're going to look at the 4-hour chart. We can see that on Monday the 11th, there was a huge up movement in the morning, followed by some up movement in the afternoon, a bit of a red down candle on the morning of Tuesday, the 12th, and then some upward movement in the afternoon, but again, not much above where it closed the day before, just 0.02 to 1/100%. Not a lot. Derivative oscillator lost a little bit of its energy, but again, confirmed up moves on the short chart. But when we look at the long chart, what do we see? It is trying to make its way into an up move, but has not done so yet. If you see the short chart drop back over and start moving in the direction of the large chart, of course, that is where you want to look for a signal to get into a down move, if indeed that occurs. Remember, we watch for movement in the big chart, we watch for the short chart to roll in the opposite direction, and then to correct itself back over to the big chart. That is your jumping in point on getting into the movement. That is where we are as we finish up the day on Tuesday the 12th and move into Wednesday the 13th. We love to hear from you. Let us hear from you. Know what your thoughts, needs, desires are. You have questions, concerns. I was just dealing with a few before I started the podcast. We're glad to hear from you anytime at Charting Wealth. Be sure to sign up at our website for our daily newsletter, which of course is the video and audio podcast. You can also find the audio podcast on iTunes. And we'll send you, for everybody who does sign up for our podcast on a daily basis, you will receive How to Read a Stock Chart video, the link to that, and the layout that we use at freestockcharts.com. Thanks again from Charting Wealth.